We'll move on to the Nigerian Stock Exchange. Despite an increase in the market activity that we saw the all-share index drop by 0.6% to close at 33,406 yesterday. This represents a year-to-date performance of 19.33%. The fall in the index was largely due to the profit taking on Leslie, which came down down 5.2% from its all-time high of 981 to close at 930. On the fixed income front, the CBN held an OMO auction yesterday. NIBOR rates declined across most tenors with the exception of the overnight tenor. Now, this is a reflection of the liquid system on the back of yesterday's 320 billion Treasury maturities. The bond market was relatively active with yields edging high and average 9 basis points across most maturities. Now, joining me from Stanbic IBTC for some analysis on the market, we have David Alao, who's an analyst, and he'll be telling us his views on the market. David, thanks so much for joining us today.
Thanks, Didi.
Great. Now, David, say you're a long-term investor. Now that the outlook for inflation has improved, how does it impact your allocation of funds in fixed income and equities?
Right. I remember sometime last year I had a chat with Wally, and he was asking, where do I see the yields closing the year? You know, if I was going to see yields in the bond market close sub 10, and I said, look, this thing is going to be bounded by inflationary figures. So now that we've seen inflation print 9%, I expect bond yields to tend downwards as they have done already. Also, somewhere down the line, sometime in H1, towards the end of H1, I think the CBN should relax monetary policy somewhat formally. And to that extent, I think that yields would also trend further downwards, probably another 100 basis points thereabout. Regarding the equities market, we think the equities market, there's still substantial value in this market, particularly in some names in the banking sector. For example, the banking sector still trades probably around 8 times earnings relative to emerging market pairs trading at something around 14, 15 times earnings. So there's still value there. Obviously, in the consumer space, it looks rather expensive in Nigeria at the moment, trading at 26 or 27 times earnings, when emerging market pairs are trading at 17 times earnings. From that perspective, on asset allocation, I think to fixed income, we are still bullish. We still remain long, and we are long duration, and we would tend to probably just ride this market. In the equities market, obviously we have increased our allocation to equities, which we did sometime last year. For people who are still sitting on the sidelines, I believe that the dip that we currently see in the market is a buying opportunity.
Okay, now let's look at another asset class. We have REITs being in focus these days in the light of UAC Property Development Company's 30 billion naira IPO that opened on Tuesday. Are REITs something that you're looking at more closely today, or are you more inclined to allocate into fixed income and equities?
Right. From a fundamental point of view, real estate is a no-brainer. It's an asset class that is, that has significant potential in Nigeria. Statistics say you've got a housing deficit of about 17 million homes. You've got that growing at around 2 million, 3 million per year. You've got a population growth of about 5%, and on the commercial side as well, there is strong need for shopping malls. When you compare Nigeria to South Africa, population-wise, we are, significantly larger. However, when you look at the number of malls and recreational facilities, we have much less. So there is certainly scope for that market. However, there still remain structural issues. You've got issues with tax, you've got issues with transfer charges. So really, these structural issues need to be addressed by the regulatory authorities, and I am aware that there are discussions being held at the moment, and that should improve the quality of this asset class. And from that perspective, we believe that the long-term outlook for the REIT market is actually quite bullish, and it's something that we will look to participate in some time in the future.
Okay, now let's go back to equities. I think a lot of people expected to see Nestle continuing the upward trend, especially with the good financial results and the dividend declaration that was released. Were you surprised by the market performance?
Do you mean the market performance yesterday?
Yes, of Nestle, yes.
Well, actually, no, I'm not surprised. Okay. And I'll tell you why. You've seen a stock that's gone from around 300, 400 naira levels, hitting 1,000 naira, unheard of in this market. And from that perspective, I guess when it touched 999 naira, a lot of investors must have thought, okay, you know what, it's time to take profit. And it's a recurring theme in our market. Some investors are short-sighted, and when they see a bit of profit, I guess maybe it's from a psychological point of view, they've been burnt in the past, and they feel that, okay, if I've seen 15-20% profit, why shouldn't I take profit and just move on? So what we're seeing currently is guys taking profit in this market. However, if you look at the growth potential in Nigeria, if you look at the opportunities in the consumer space, if you have a long-term view, 3-year, 5-year long-term view, particularly for the likes of the pension funds, I think that Nestle is a good company. However, at this point in time, I think it's quite pricey.
Okay, now on to fixed income. We've seen an inflow of statutory funds coupled with the maturity of bonds this week. I would like to know your thoughts on the capacity of CBN to mop up increased liquidity in the market this month.
Time and time again, we've seen the CBN come in and sort of try to use OMO maturities to sort of mop up liquidity in the system. With the bills maturing yesterday, I believe we have another maturity today. With that, I think that we should see more OMO operations in this market. The effect it would have, yes, yields might end up slightly. However, I know also that really is more about the capacity of individuals in this market, participants in this market to allocate their money market investments adequately. For example, we've seen rates from banks significantly decline, so an OMO might be an alternative for those that have appetite for such maturities, for such durations. But for investors, fixed income investors that have a longer term outlook, it may be worthwhile to just allocate as long as you can, probably do 1 year, or even buy a longer tenured instrument if you can.
Okay, now we've seen strong interest at the shorter end of the yield curve this week and increased liquidity, as I said. Is this something that we can continue to expect to see?
Pardon? I didn't hear that.
We've seen shorter, hello, can you hear me?
Yeah.
Okay, we've seen a strong interest at the shorter end of the yield curve this week and increased liquidity. Is this something we can expect to continue to see? Right.
I think, yes, we've seen some interest in the short end of the curve. However, I think most investors would actually prefer longer maturities, okay, because there's the expectation of a decline in rates. However, I think that, from my perspective, I would rather put on a barbell strategy at the moment, just for the fact that, okay, there are some factors that should drive short-term yields higher, and I would like to allocate to that. For obviously, as we're fund managers, we do have cash calls and redemptions in the near term as well, so I would use the OMO operations for that. But where we need to allocate to more longer maturities, I would probably do discount notes that would give me a higher yield.